Good morning, everyone. Can someone just confirm if they can hear me?
We can hear you.
Thank you, Vasi. Good morning, everyone. My name is Lubone Kwanda. I am the Secretary General of ASABA, and I'm going to be your host for today. Thank you, everyone, for joining us to our highly anticipated masterclass. Today, we'll be diving deep into the world of AI, exploring how AI is transforming our very own actuarial profession within short-term insurance. I'm excited, and I hope you guys are as excited as I am. Now, before I introduce our keynote speaker for the day, I'd like to encourage you all to participate, engage, ask questions. You can post them on the chat box, and let us make this session an engaging one. Introducing our keynote speaker is Mr. Ronald Richman. He is the Chief Actuary of Old Mutual Insure, and he is the Fellow of the Institute and Faculty of Actuaries and the Actuarial Society of South Africa, ASA. He also holds a practicing certificate in both short-term insurance and life insurance from ASA. He holds Masters of Philosophy in Actuarial Science with distinction from the University of Cape Town. Ron also chairs the Actuarial Society of South Africa's Enterprise Risk Management and Climate Change Committee and is a member of Aston Board. Please join me in welcoming Ronald Richman as he takes over the screen.
Tony, thank you for the warm introduction, and thank you everybody who's joined. Today I want to talk about something that I'm very passionate about, which is what does artificial intelligence mean for the actuarial profession? And what I'd like to explore is what is a vision that we can have of an actuarial profession that not only survives in an age of AI, but also thrives and becomes even better than what it's been. That's what the theme is about. I'd love this to be quite discussion orientated as well. So you're welcome, please, to put any questions to me through the Q&A, and I know Luponi will kindly stop and we will answer some of those, but let's have a discussion about how the actuarial profession can move forward in an age where AI and more and more advanced AI models are becoming the norm. So what is this talk based on? During the first half of this year, I wrote 2 papers. One is thinking about what deep learning means in the context of being an actuarial professional, and this was joint work with Roseanne Harris from Discovery and Mario Wuttrich from ETH Zurich. And then the second paper is an AI vision for the actuarial profession, where I tried to take a bit more of a future-looking view. What does the actuarial profession look like, and how can we adapt and change to deal with these advances in methodology that we're seeing on a daily basis? Maybe just one word of background. Deep learning is all about how you build, parameterize, and fit very complex neural network models. And the way that I think most people out there in the public have encountered these models now is through applications like ChatGPT, through Anthropic's Claude model, through Microsoft Copilot, and the whole range of large language models that are now available. The methodology that underlies these is deep learning. And also what we'll be exploring here is what is the point of deep learning and how can we conceptualize it for actuarial work. If you want to read these papers, we'll be releasing this deck, so you're welcome to click on the links. The papers are free and feedback would be most welcome. So we're going to be talking a little bit about deep learning. So deep learning and AI are revolutionizing various industries. I think every day now there's a new advance in AI models. Last night, Google released an updated version of Gemini Pro. And this is now the leading large language model in the world, if you look at some of the benchmarks. And these events of having a new leading model are happening almost on a daily basis. So there's definitely a paradigm shift in how data is being analyzed, the sort of computing power and techniques that are available, and how decisions are going to be made. And then when we think about the actuarial profession, if we don't adapt, I don't think the future for the actuarial profession is bright, but I do think we can adapt. And really what we're going to cover in this presentation is what are the tools that are now available for us as a profession, from deep learning, from large language models and other components of these advances. What is a new vision for the profession. And this is something I like to call the AI enhanced actuary. We'll spell that out a little bit. We'll talk about what could an example reserving process look like in this new AI enhanced world. We'll talk about some of the key challenges and solutions, and then importantly, how does this all fit into our professional guidance? So actuaries are not just experts at statistics, at modeling, etc. We also held to a very strict system of professional guidance. So how do these advances fall within that? We'll then talk about value creation and implications for education. So I hope by the end, you'll understand at least what is this vision of the AI enhanced actuary, and I hope you'll be excited to join this direction of thinking and make your own contributions. So what I'd like to start off talking about is, what does AI mean? I think there's what's become very popular is general AI. So these are AI systems that can potentially perform as well or better than people on a very wide array of tasks, and that's why it's called general. And large language models like GPT-4 and Claude 3.5 are maybe examples of the sorts of models that are starting to approach a more general form of AI. So if you log into ChatGPT and you ask it a question about any actuarial topic, you'll get an answer that sounds relatively sensible. It's not going to output complete nonsense. Sometimes these models do output complete nonsense, but in most situations, you're going to get something pretty reasonable. And the reason it's called general AI, or you could think of these as more generalized models, is regardless of what topic you'd like to discuss, they can come up with a relatively coherent answer. Narrow AI, in my view, is a slightly different conception. And this is where you have AI-driven applications which are designed to perform very specific tasks. So in the actuarial world, this might be focusing in on pricing or reserving. And it's where you have a tool or a model which is tailored to solve a particular actuarial problem. Wider than the insurance industry, another example of a narrow AI system might be the use of deep neural networks in Tesla's self-driving application. So they rely on a series of neural networks to process information you get in from the car's vision sensors, and then it provides guidance and direction to vehicles. So that's another example of a narrow AI application compared to a general AI application. And maybe something for the audience who's listening to think about is, which of these are likely to be more impactful for actuaries and for the work that we do on a daily basis? And I'd like to argue that narrow AI tools are probably the low-hanging fruit for us. So right now, there's specific AI tools that are developed in the actuarial literature, and these are designed to revolutionize part of the core tasks that we do as actuaries. Why do I think these are low-hanging fruit and probably more important in the short term? It's because these narrow tools allow actuaries to build models more quickly, incorporate new sorts of data, get greater accuracy than traditional methodologies, and use new types of explainable models to ensure that all of our stakeholders understand what we're doing. So the first message I'd like to give in this presentation, at least from my perspective, is we need to think beyond the current AI hype that's out there and focus in on what's going to have more of an impact in the short and medium term. Is it narrow AI tools or is it general AI tools? And I would say embracing both, but starting to work harder to integrate narrow AI tools into actuarial practice should perhaps be the goal that we think of. So what are the tools that exist from a narrow AI perspective, right? And I think what's really interesting is that if you read through the recent actuarial literature in the good journals, you see that people are applying narrow AI tools to accomplish tasks in pricing, in reserving, in risk management, and all sorts of other areas. So because this is mainly focused on short-term insurance, I'm going to focus on our short-term insurance application. So let's talk about pricing. What AI allows you to do, let's say you build a deep neural network or a boosted tree model, you don't actually need to sit there, pick factors, try pick levels of how your data and your explanatory variables relate to your outcomes. You can very easily have highly accurate and granular risk segmentation and much more personalized pricing strategies for individual risk profiles in your book. From a reserving perspective, there's been a lot of work done on large-scale neural network models, which produce automated sets of assumptions for actuarial modeling, and this allows you to streamline the reserving process. It means you can get more accurate reserves out more quickly. And then finally, from a risk management perspective, there's applications like forecasting yield curves or working out what's the value at risk in a mortality scenario. And these improved risk assessment and mitigation strategies emerge or are enabled by the application of narrow AI tools. And if some of this sounds quite interesting, we're not going to focus on the details of these tools in today's talk, but there's a reading list at the end of the deck which should give you a feel for what are these advances doing across a lot of the core fields of actuarial practice in short-term insurance. So what are the benefits if we sum it up? One benefit is model accuracy. So a lot of these publications and a lot of the work that happens behind the scenes that maybe doesn't get published shows that adopting a machine learning and AI approach gives you much greater accuracy and efficiency in building models, which is the core task that a lot of actuaries do. They also allow for new data sources to be integrated into actuarial modeling. And when you start to see some of the interesting data that's presented by telematics devices or wearables, or some of the more interesting and granular data that comes out of reward program participation, you can start to realize why you might want to start working with some of these new sources of data and process it through these sorts of models. And then finally, automation of tasks. Something that they often say in the data science world is that 80% of your time is spent cleaning data and 20% of your time is spent building models. I think in the actuarial world, it's also very similar. Maybe 80% of our time is spent reconciling data, and the real value-adding work that requires the sort of skill set that we develop through our actuarial studies, that only gets applied or utilized a smaller proportion of the time than we'd like to admit to ourselves. And I think a great benefit of AI in actuarial practice is, can we automate away routine tasks that doesn't require higher level thinking and rather focus on more complex problem solving? So the next message I'd like to give from my perspective is I think actuaries need to level up, right? And what do I mean by that? So there's been an evolution of AI tools where the narrow tools like applied in the traditional practice areas like pricing, reserving, risk management, or large language models, there's just been an explosion of new tools becoming available to the actuarial profession. And while there's the profession has started to explore the potential of these tools in traditional areas, there's been a really slow pace of change. And most actuarial jobs today aren't qualitatively different in terms of how we use our tools from the jobs that actuaries were doing maybe 5 or 10 years ago. So there's been a slow pace of adoption. And this is why I think a new approach is needed, which is we need to level up and embrace a perspective of AI and machine learning being at the core of actuarial practice and not just an interesting thing on the periphery. And this brings us to the vision that I think provides a good way forward for the actuarial profession. And this is having an idea of an AI enhanced actuary. So what are the key ways we can unpack this idea? So the first of it is that we can empower traditional actuarial thinking and skills, which often involve rigorous maths and statistics, together, and by combining it with cutting edge predictive power and flexibility provided by AI techniques. So in other words, I'm not saying we need to throw out what actuaries have always done, and the current exam syllabus, maybe with a few adaptations, would actually be quite future fit. What this would entail is mastering AI tools and techniques. So in addition to having a good practical way of working with tools like XGBoost or deep neural networks, I think what's really important is that actuaries have got the theoretical foundations to understand how these tools work really well. So that understanding can be quite quick, and mastering these tools doesn't just mean having the practical ability to apply them, but also to understand them and adapt these tools to actuarial work. And I think a lot of the work I've done in the past couple of years that we'll also talk about later in this presentation is how do you adapt these tools, which probably have been invented outside of the actuarial profession, to deal with the concepts, deal with the challenges, and provide solutions in the areas that we work in. So let's unpack the AI enhanced actuary, right? In this vision, we take traditional actuarial expertise, but apply new tools emerging from these cutting-edge advances within the core tasks that we do as a profession. Something that we'll probably never get rid of and that we shouldn't is the fact that we need to adapt these AI methods to comply with professional and ethical standards. And some of the things we need to worry about when we apply these new tools is, can we ensure that the results coming out of them are transparent and easily understood by stakeholders who aren't actuaries, who aren't machine learning engineers, but might have a really important role to play, like regulators or board members? Can we also ensure that the way that these models are applied are done in a way that's fair and doesn't create burdens of indirect discrimination, for example? Another thing about the AI enhanced actuary is that we need to embrace an ethos of continuous learning and upskilling. So there's a lot happening out there. Like I mentioned a few minutes ago, a new AI model and a new large language model is being produced on almost a daily basis. So we need to understand these models and be able to judge, is this something that's useful for actuarial work or not? And I think that's a little bit of a change of perspective that we need to keep embracing continuous learning. It's not enough to do your exams anymore and be qualified, and that's the end of one's learning. If one wants to stay up to date with what's happening, that requires a little bit of effort continuously. I think an AI enhanced actuary is going to have to be much more collaborative with professionals from other disciplines. So a lot of these AI advances, but a lot of traditional actuarial work relies, for example, on good data engineering and having access and knowing how to integrate professionals who come from other disciplines into our world is a core part of enabling an AI enhanced actuarial practice. I think we've mentioned new data sources. I think that's an obvious low-hanging fruit if one wants to start looking at what the value add of bringing AI into our world could be. But I think it's not just a matter of staying relevant in a changing world. It's this opportunity that's being presented to us is for the profession to redefine its value profession and make a real impact in a world that could be driven primarily by AI models in the next couple of years. So let's look at an example, right? So we've spoken in quite an abstract and principles-based way. How could we transform a process that we currently have? So let's talk a little bit about the current state of non-life reserving. So many reserving analyses still rely on very traditional reserving techniques, like you'll start with a chain ladder, you may apply the Bornheder-Ferguson technique, or Cape Cod, like we've spoken about before in these masterclasses. And then another thing that you might do is, after you've applied these techniques, you might manually compare what was your actual development in a quarter's time to your expected, to get some sort of feeling more on a qualitative basis to assess your accuracy and sufficiency. And then you may, for example, manually select which technique you're going to apply and blend the assumptions together for each line of business. And what I'm trying to illustrate is that in the current state of play in most actuarial functions, this is a highly manual and time-consuming process. It also relies very much on each individual actuary's expertise. So you may, if you have less experience, spend a lot of time applying methods mechanically. If you're more experienced and you understand how to read triangles, I think the risk is that takes a very long time. It is hard to get a set of reserves out on a timely basis. Another very interesting point about the manualness of the process is that you often only put the pieces together at the end of an exercise and realize, hey, there might be some trends in our motor lines of business, or there might be a trend in development in long tail lines of business. And being able to leapfrog some of this manual work is a core thing that I think we need to do to transform the current state of this particular area. It's also interesting that while there's been a lot of advanced techniques developed for reserving out there in the literature, there's very little integration of this into the traditional reserving workflow. And this means we might be missing out on some of the more complex insights that we could deliver. And then finally, once you have a set of reserves, and these have been peer reviewed and communicated, you have to write a long report, and writing that report can take days of a skilled actuary's time and is something that's only delivered right at the end of the process. So keeping this in mind, this is maybe a little bit of a pessimistic view, but I don't think it's completely incorrect about how a lot of actuarial processes work today. And how could we take this forward to a future where we reserve with AI? the first point would be an automated data extraction and reconciliation process. And you could have, instead of having a highly skilled actuary reviewing data queries and sending out emails to ask questions, this is the sort of thing that would be a prime target for automating with a large language model. Another AI system, for example, large language model agent could analyze your actual versus expected exhibits and understand which lines of business seem to be having problems. And another thing that these systems are really excellent at doing is detecting common trends. So if you've got trends in your actual versus expected, these systems could group them together and even start writing a report on what are the critical concerns that they've picked up in the data. Another vision could be, instead of having a whole bunch of individual models, like we mentioned on the previous slide, individual chain ladder models, individual Bornhuetter-Ferguson models, what is very easily achievable, even in practice today, is have a large-scale neural network reserving model that pulls in data across your lines of business to enhance the credibility and accuracy of its predictions, and effectively function in an automated way to produce a set of reserve numbers. You could compare these numbers that, for example, a neural network technique has produced to those coming out of other automated reserving procedures. And again, either an actuary or a large language model could select the best combination of your techniques. And then finally, from a summary and presentation perspective, it's very easy to think of all of this output being pushed into GPT-4 or Claude 3.5, and a report being written and a presentation being built, all happening automatically. So this vision is probably achievable today, I think is quite important to say. A lot of the different tools already exist. Large language models are now good enough with a little bit of prompting to achieve this automatically. And I think thinking through the difference between this current state that most companies are in and this future state starts to give one a vision of what could an advanced AI-enhanced process look like if we made the effort to build it. So what are some of the real-world issues you might encounter in an AI-enhanced reserving process? So let's talk through some scenarios and how you might actually practically solve these. So imagine during the reserving process, you discover that there's a new line of business. And this is a little bit of a nightmare that can sometimes happen. After you think you've reserved all of your lines, you've realized, hey, last quarter we started writing a new product, and something that's topical and a few companies are now starting to offer is an errors and omission or crisis management policy for an AI-based system. So the challenge with this sort of line of business might be, because it's a new product, there could be limited data availability. You might, for example, only have 3/4 of reserve development, and you'll have very noisy loss experience because it's a small book of business. So what could a solution in an AI-enhanced reserving process be? A massive advantage of neural network models is once you've got a representation of all of your data. So for example, you might have an abstract representation of your motor classes, of your property classes, and then your liability classes. You can fine tune that model to produce reserves using very little data for a new line of business. And what you can do is then compare how do those fine tuned parameters relate to other parameters in the model. And you might, for example, identify that the most similar lines of business here are cyber insurance and product recall. And this way you could have a fine-tuned neural network model which is learned across lines of business and apply it to a situation where you have very little data. That's an example of an idea called transfer learning, and you might then decide in the scenario to book those reserves of business. So the reason this is important is you can easily adapt AI models to handle new lines of business, especially where there's little data, and this is highly crucial for accurate reserving and decision making. Another issue is you might get some external auditor challenge, right? So imagine a situation where you've done your annual reserves using an AI enhanced process, and your external auditors ask your actuaries whether or not there's too much allowance for negative development in your long tail lines of business. And what the market practice generally is, and this is actually based on some real experience with automated reserving models, is they tend to allow for a lot more negative development than we would from an actuarial perspective. And what we generally do is perhaps include a tail factor instead of allowing for the negative development. So what's a potential solution? You might think about methods which align AI models with human feedback. And you might realize that there's a whole lot of techniques that are being discussed out there to incorporate prior judgments, for example, through Bayesian methods or imposing constraints on a network. And after implementing these modifications in this sort of scenario, you might have judgment-based tail factors that you incorporate into selected lines of business. And the importance of this thinking through this scenario is integrating human experience and actuarial judgment with AI models is a key thing that's happening out there in both the AI and actuarial literature, and thinking that we're not able to do that is a potential pitfall, and maybe based on a mistaken assumption. So what's the message from these two scenarios that we've thought about that could occur in an AI enhanced reserving process? Firstly, that actuaries should be prepared to leverage AI models to handle new or unique situations, and that by really understanding the state of play of methodology with deep learning models, you actually can realize that there's good ways already of incorporating industry practices and stakeholder expectations into the modeling process. So let's talk a little bit about how deep learning, which, as we said before, is the methodology underlying a lot of these advances in AI. Let's talk a little bit about some of the key areas where these models need to be adapted. One of these areas is model explainability. So the first question that you'll get if you try apply machine or deep learning models is, are these models explainable? And I think the answer is yes, and we'll explain a little bit about what sort of techniques you can apply, but also the fact that there's inherently explainable machine learning models that have recently been developed. Another one is mitigating bias. So there's a lot of thinking around how do you define bias in an algorithm, and how can actuaries incorporate some of that thinking into their ideas. And then finally, tools and techniques for addressing variability. So often your predictions from these models are not always as stable as traditional actuarial models, and how can that be addressed? So these are three areas we'll address in the next couple of slides. So the first one on model explainability is machine and deep learning models are often seen as black boxes, right? And an interpretation of what people mean when they say that is it's difficult to understand how decisions have been made when you're relying on an automated system that's learned its own patterns in the data, and you haven't really instructed on these models on how they should be making their predictions. I suppose the one really good answer is post hoc interpretability. And there's techniques like SHAP, PDPs, ice plots, etc., which help you visualize the relationships that the model has learned or assign importance value to features. And while these techniques are good, they also have their own series of pitfalls. And something that I discussed in the papers that I mentioned earlier is what are those pitfalls in particular with a technique like SHAP, and how can you overcome them? And then, because there are those pitfalls, what I think might be a better approach is using inherently interpretable models. And the one that I've presented before at ASA is the local GLMNet, which is a model that uses a neural network to drive GLM predictions so that you can exactly understand and explain your model behavior. If any of the people on the call prefer boosting models, there's a lot of great work that's being done by a team at the Wells Fargo Bank, where they've released an XGBoost model that can be disentangled into different types of effects, and it effectively makes XGBoost into an inherently interpretable model as well. And I'm happy to provide that reference if that's of interest. Mitigating bias and ensuring fairness. So AI model bias can arise because these models can inadvertently introduce discrimination against protected classes. And there's been a lot of work where people have tried to think about how can we mitigate this. The technique that I've been involved with a little bit is discrimination-free pricing. And this removes the impact of protected characteristics from pricing model variables, for example, like the impact of ethnicity or gender on things like credit score. So I think that's a really promising approach. And even if you're missing data, you can use the flexibility of AI models to extend these sorts of techniques to realistic scenarios, for example, where you may have incomplete data and you're not fully able to identify the protected characteristics in your data set. And then finally, addressing variability and reproducibility. So something that is quite well known if you fit some of these models is that both neural networks, but any other type of machine learning model that relies on an element of randomness, like gradient boosted trees or random forests, all of these produce predictions, and each time you run the training of these models, you get a slightly different outcome. And what works exceptionally well with neural networks is you can train multiple independent networks and average their predictions. And this basically, as you add more and more networks, produces a much more stable set of predictions that is reproducible. And this is a critical aspect of deploying deep learning models for actuarial applications. You don't want to run your reserving model once, someone overwrites it and you can never get back to your original predictions. A much safer way of having any machine learning model for actuarial practice is run the model multiple times and aggregate the results up. And that solves this problem of variability and reproducibility, but also often produces more accurate and better predictions. So what are some of the key takeaways from this section thinking about the tools? One takeaway is that you can adapt deep learning models to the specific needs and requirements of actuarial work. Explainability has more or less already been achieved through post hoc interpretability methods or inherently interpretable models. They're really good methods already available in the literature to mitigate bias and discrimination risks, and we know how to make these models reliable. So the point I'm trying to make in going through this in some detail, and another message from this presentation I hope you take home, is that AI models for actuarial work aren't something to think about in 5 years or 10 years. The core challenges, or a lot of the core challenges, have already been addressed, and there's already good solutions for these. Let's talk about professional requirements and artificial intelligence. So how can you be an actuary and fill in your declaration to ASA or the IFRA or to your regulator that you've complied with professional governance? So we need to navigate a vast landscape of standards and guidance, maybe issued by a body like the IFRA, or maybe issued by a regulator like the Prudential Authority or the PRA in the UK. And you have to comply with these requirements, in particular requirements relating to understanding your model, ensuring your models are fit for purpose, and that there's no bias baked in. Another key thing is that you need thorough documentation of your models. And finally, you need to make sure that if you're going to deploy advanced models, you need to make sure that you as an actuary can say affirmatively that these models comply with professional standards so that you maintain the integrity of your work and the trustworthiness of the profession. So how can we do this? I think one is analyzing the professional standards to understand what are the actual requirements that impact our models. Clear documentation showing how you've investigated some of the model limitations and risks can help you avoid bias and discrimination, and also understanding how these models are being used out there. So a really nice technique that I'll give an example of is there's an idea of a model card, which basically says what is a good use of the model and what isn't, is a sort of technique that we can get from other areas by collaborating with people outside of the profession. So let's have a quick look at the relevant professional standards and guidance both in the UK and South Africa. So in the UK, you've got Technical Actuarial Standard, or TAS 100, which governs model building and use. And there's also really good guidance issued on TAS 100 called the TAS 100 Model Guidance. And in the UK, you've also got the Actuaries Code. In South Africa, you've got a little bit less guidance that focuses directly on technical items, but you do have APN 901, which is the General Actuarial Practice Note, and the ASA Code of Conduct. And mapping the requirements from each of these standards to the use of advanced models is something that I did in the first paper that I presented. And maybe let's just look at some of the findings from these. So in South Africa, APN 901 gives you a lot of general standards for actuarial work, and it covers professional conduct, how you comply with other actuarial standards, reasonable judgments, and model governance. And then in the ASA Code of Conduct, you have expectation for actuaries to apply specialist knowledge, being able to demonstrate continuous ethical behavior, and how you're accountable to ASA for professional oversight. In the UK, you've got a similar set of requirements. So instead of the actuarial body issuing a lot of these standards. You have an independent financial reporting council, and these are principle-based standards which govern actuarial work. And basically, they require you to identify risks when you're building models, identify and make sure your judgments are correct, and all of the sorts of things that you'd expect good model governance to look like. The Actuaries Code in the UK is very similar to the ASABA Code of Conduct. There's several principles around integrity, competence, and other issues. And the TAS 100 model guidance from the FRC requires in particular model understandability. And that model understandability effectively means you can't use black box models in the UK if you can't understand the basis for decision making. Let's talk about this in a little bit more detail. So the TAS 100 principle for models says actuarial models must be fit for purpose, understandable, and have sufficient controls and testing. As we've said, the Actuaries Code emphasizes competence and care, and then the APN 901, which is in South Africa, mandates also an understanding of models, including the potential purposes and limitations. So what you could very strongly argue is using black box models without interpretability or without an inherently explainable version actually means you don't comply both with the South African guidance or with the UK guidance. There are some approaches that are suggested for understanding complex models in the TAS 100 model guidance, but I think what we can say as a conclusion on this topic is that applying post hoc interpretability methods or building inherently understandable models gets you extremely close to full compliance, both with the TAS 100 if you're based in the UK, or you're an IFLA member, you might think about that, or APN 901, which all South African actuaries are required to do. So key takeaways when we think about professional governance is that both the UK and South Africa have established professional standards and guidance. There's specific guidance on validating, understanding, and governing models. And whenever we use or deploy AI models, we need to think about the implications of these standards, and using inherently understandable models is one quick way of demonstrating compliance. Let's talk about value creation. So we've spoken a lot about the AI enhanced actuary, what the vision is, what the tools are, how we can comply. Why should we do this? So I think the first one is that society as a whole benefits. So if we're able to price products better, incorporate new data, come up with new products, and also just be more efficient as a profession, we can make a better contribution to stable and resilient insurance markets. From a policyholder perspective, you can enjoy fairer premiums, more personalized products, and hopefully an improved customer experience where you can have personalized communications. There's huge value for insurers because of increased efficiency, innovation, and the potential for better data-driven decision-making. And I think from an actuarial perspective, and the message that I'd like to give, we've got a great opportunity to enhance our skills, lead on AI, and drive innovation in the insurance market. And with that in mind, while we focused a lot on insurance, there's also a potential for actuaries to have new and interesting future roles in an AI-driven world. So let's think about some of the unique value that actuaries could bring in the development and application of AI outside of our traditional domains. So what do we bring to the table? We bring a good understanding of risk. We bring a really good commitment to professional and ethical standards. And we could bring newly acquired AI skills on how we can apply these tools and techniques within our own professional world. And if we bring all of this together and deal with the challenges in our own backyard of leveling up the actuarial profession, perhaps there's a pivotal role for actuaries, not only within traditional areas, but also outside. And let's think a little bit about what some of those future roles could look like. I see we've got some questions. Luvani, would you like to just look at the Q&A or the chat?
Yes, there's a question from Anonymous. It says, what are your views of the AI-enhanced actuary in the context of those that operate as a generalist rather than a specialist?
Okay, so let's maybe park that one just because it doesn't relate so closely to the content. Well, can we come back to that one at the end?
Okay.
Cool. So just looking at some of the example future roles, these are things that I brainstormed a little bit about, and I don't think it's too far from reality. One could be an AI system for general risk assessment and management beyond the traditional insurance domain. So we've got really good expertise with risk quantification, and if we join that with AI skills, you could start applying that wider than actuarial, the traditional actuarial areas. So you could design and validate AI models which either quantify or describe risks across complex domains. And this could also contribute to the development of how do you apply risk assessment to AI practices itself. Another one could be an AI governance and ethics actuary. So this is where you bridge the gap between technical AI development and the ethical considerations using lessons learned applying these models in a highly regulated field like insurance. And this could be a great opportunity to collaborate with policymakers, regulators, and other stakeholders. And then finally, a resilient AI systems architect. So what is the vision here? So we know that the external environment is constantly changing. And something that we're pretty good at is working out what are the risks of a particular financial position through stress testing, scenario analysis, and building model validation. So another place where we could apply the actuarial philosophy in this vision would be designing AI systems that perform well under uncertainty and also remain resilient under a lot of stress. So I think there's a lot of future potential roles that are available for the profession if we decide to embrace this path. Just from an educational perspective, so there might be some people who've been through the traditional actuarial syllabus and are thinking, wow, I wish I'd learned that, or even people who are still going through an educational system that hasn't changed enough, in my view. And you might be asking, well, what should we do about it? So I've got a little syllabus in one of the papers at the end of that paper on how you could change the actuarial syllabus. But the key message I'd like to say is that most of the resources that are needed to understand this new world are freely available. And if you consult the reading list at the end of this presentation, maybe that will help. And like we said, these are some of the areas I'd love to see in a new actuarial topic on applying AI and machine learning within an actuarial context. So hopefully this will make a little bit of an impact if there's anyone involved in actuarial education on this call. So let's talk about positive and negative scenarios for the actuarial profession. So we like doing scenario analysis for the companies we work for. I think it's equally important to do some scenario analysis for the profession. So let's paint a positive scenario, and this is maybe a bit of a 1 in 3 year upside. So the way this could work is that the profession decides rapidly to adapt to include more advanced AI and machine learning content, right? That we encourage and drive innovative applications of these techniques in traditional problems, and that overall actuaries become more able and willing to apply data-driven and model-guided thinking approaches, right? This means that the AI profession, or the actuarial profession, could start to thrive in an age of AI, leading innovation both within traditional areas but outside. But there's also a negative scenario, and like I said, we often think about negative scenarios in an also. A negative scenario, and unfortunately this in my view is almost the best estimate path that we're on, is that the profession fails to embrace new AI and deep learning tools and techniques. And that means that actuarial areas that need advanced predictive modeling start to get taken over by machine learning specialists, and the profession increasingly becomes focused on regulatory and accounting matters. And this means we lose key skills in technical domains. This would lead to a situation where we struggle to keep pace with advances in AI, and we miss opportunities for growth and innovation. And the outcome of this negative scenario would be that the profession survives, but doesn't thrive in an age of AI with diminishing influence and impact over time. And I think the way to ensure that we move more to the positive scenario instead of to the negative scenario is by embracing a vision of the AI enhanced actuary. So like we've said in this presentation, and this is just a little bit of a conclusion slide, I think it's clear that AI, and whether general or narrow, could revolutionize our profession. The how is by providing more accurate insights, bringing in new data and dramatically increasing efficiency. By enhancing the profession with new opportunities for innovation and value creation, that would cement this vision of the AI actuary, and we could show stakeholders how we're amplifying and building on the unique strengths and values of the actuarial profession. A key message that I'd like to give is that there are challenges, but solutions already exist. And by having the profession embrace some of these solutions, we could also create value both within our traditional markets and outside. And I think the future vision and the future position of the profession is bright if we start with each actuary who's listening to this call thinking about how you can become an AI enhanced actuary and not settling for the way that we've always done things. And hopefully that would help to avoid the negative scenario I've spoken about and push the positive scenario. Reading list, these are some really good items if you want to learn more. This is a highly technical book by Mario Wittrich and Michael Mertz, which contains a lot of the theory you need for this. There's some papers on applications that I've mentioned, and hopefully that reading list will be useful. So with that, let me hand back to Lihone and we can discuss some questions.
Thank you, Ron. There's a question from Lens. It says, in terms of explainability in machine learning for pricing, what are the common techniques used beyond feature importance? I may have missed the others listed. For instance, for governance, how would you measure how understandable a model is in order to meet the standard for acceptance? What metrics can be used?
So I think that's a brilliant question. Thank you for that. So beyond feature importance, right? And that's maybe what we often take away from an actuarial studies is let's look at p-values of models, which actually are not that useful in a world focused on prediction. You can start to quantify what are the exact relationships of various variables with outcomes of models. So let me actually show something on the screen, and this is a little bit of technical content that I didn't present before. I'm going to share. So this is from a paper that I presented at the STIC last year, and this is a pricing example. And what we've got is, let's look at driver age and claims frequency. And what you can see is these, you get different types of techniques. And the one that I'd recommend, which is a conditional expectation plot, shows you the exact relationship that you have in your model at each level of driver age. So you can start to understand how does driver age relate to the predictions that are being made by a model. There's also a traditional feature importance. Let's see if we can find some of this. This is what is the contribution of each feature to a model output using different types of SHAP. This is conditional, and this is unconditional, and I'm not going to go into what that means in too much detail, but it gives you a little bit of a view that, for example, having a good bonus malus score means that you, having a low bonus malus score means that you get a much higher premium, and hopefully that just gives a little bit of a view. You can also build plots like this, which really, in quite a lot of detail, try to illustrate what is the impact of a particular variable on the model output. So hopefully that answers it. To answer the question of how explainable is a model, I think that's a qualitative view that needs to be taken by an actuary, right? So you need to be able to understand what is the model structure. Can you tease apart the relationships in the model? And if the answer to those questions is yes, we can, well then I think that helps you answer it. Lihone, maybe we can go back to the previous question also, which was, this seems very applicable to specialists. How can generalists use this? I think a real power up for generalists in the actuarial profession is you probably do a lot of report writing. You probably do a lot of presenting. You probably need quickly to do bits and pieces of ad hoc analysis. And I think for me, the path there is how quickly can you outsource that in a reliable but also efficient way to large language models. And I think understanding and building on that should also be something that we focus on as a profession.
Thank you so much, Ron. There's another question from Anonymous. He or she is asking, what would your advice be to an actuarial student who has been struggling to finish their final exam? Should they rather do masters in data science and stop at AMASA? if I can add on to this question, I also wanted to ask if you'd say there's a difference between data science and AI.
I think good questions. Without knowing a person's particular circumstances, it's very hard to give good advice. But if you've come this far that you've got one exam left, just do it. Keep on doing it. There's no downside. And I think what one also has to realize, if you're an actuary, hopefully you know the difference between a best estimate prediction, but then the fact that you can have random outcomes around that prediction. So you also need a little bit of luck sometimes, and the more you increase that luck by writing that exam more and more, is probably the basic approach I'd suggest. Data science was something that's extremely popular in the last 5 years. But if you look at where the hype is these days, it's now around AI. Data science emphasizes more of a continuum of activities that you do with data, like extracting data, visualizing it, understanding it, building models, and reporting on it. Whereas AI these days seems to be much more focused on building large-scale foundation models across a domain and then applying them to particular tasks. So if you want to differentiate, that's how I would do it, but I don't think there's a 100% right answer.
Thank you so much, Ron. And then a follow-up question from Karen. She's asking, what advice can you give to an actuarial student who is keen on AI, but working in a team that is moving perhaps too slow or not embracing AI as much?
So I think one really good thing to do is to start doing a little bit of your work with AI. So obviously that should be done after communicating with your manager and making sure that it's in line with company policies and procedures. But if you're, for example, building a reserving model, there's very little that stops you building something just a little bit more advanced. So I think the process for that is a little bit of self-education. What are the possibilities for a particular task that you're doing? Understanding how to implement, and then going ahead and doing it. And I think generally by doing something from a grassroots perspective, you have the opportunity to demonstrate increased efficiency, increased accuracy, or better outcomes to stakeholders. And that's a good way of being an evangelist for some of these ideas and concepts.
Thanks, Ron. And another question from Anonymous. The Department of Basic Education has announced that coding and robotics is set to become a compulsory subject in RSA. How do you think this will play out and impact the actuarial profession? What does the actuarial profession need to do to ensure it continues to remain relevant?
I think the one thing that's obviously helpful is coding skills. So the better your coding is, the easier it is to apply some of these techniques and paradigms within your work. So I mean, having everyone in South Africa with a good set of coding skills would be an incredible vision. I think we need to understand what that syllabus looks like and make sure that there's some statistical and AI applications in there. Maybe we need to write a letter to the Department of Basic Education as well. But I think that's making sure that those topics contribute to real knowledge that's useful, in my mind, would be quite key.
And we have another question from Itumiling. The Institute of Faculty of Actuaries has, as of yesterday, announced that their members can now study towards a Chartered Institute of Securities and Investment on ethical AI for actuarial practitioners. Do you foresee the certification being a key requirement for those practicing using those techniques?
So I'm going to say something a little spicy. I think we can see the negative scenario that I mentioned playing out here, because the very fact that we have to go to the Chartered Institute of Securities and Investments for this course, and we don't think internally about what this means from an actuarial perspective, is quite sad for me. We should be leading, and we shouldn't be having to look externally on these sorts of ethical AI issues. So I don't think it will become a key requirement, because everyone will say we've already got actuarial guidance. But if anyone's got more information on it, I think that could be interesting.
Thanks, Ron. And then a question from me. So on a scale of 1 to 10, how would you rate South African actuaries on Like, how would you score them on your enhanced AI actuary based on the current syllabus?
So I think from a syllabus perspective, it's a little bit dire. There's not enough coverage of these topics. But I think the one amazing thing that the South African profession brings is we've got some of the best technical and business oriented actuaries in South Africa. And I think a lot of our actuaries are actually at the forefront of applying some of these techniques. And we should build on that as a strong actuarial profession in South Africa. So I think there's both positives and negatives. I think it's a pity the ASA education system hasn't moved faster. But I think what individual actuaries are doing is extremely inspiring, and we should build on that as a profession.
Thanks, Ron. I think ASA is trying. I know they've introduced machine learning in CS2. So we're getting there as well.
We will get there.
We have 2 minutes left. Oh, I think we have another question that I missed. Okay. It's coming from Anonymous. Have you come across anything on AI governance, essentially establishing frameworks to deploy AI safety, and quickly given it could pose all sorts of new risk?
I think what's really interesting is it depends on what type of AI system. So if it's around how do you safely deploy a large language model, I think that's where we need to have a lot of the thinking that's happening out there in the tech companies. And there's some really good thinking on red teaming models, on ensuring models produce safe outputs with reinforcement learning from human feedback or DPO techniques. So I think if you're talking about deploying a large language model, it's those sorts of techniques you need to look to. There's some really interesting thinking on that space as LLM as a judge, where you produce one set of predictions with one large language model, and you use another one to judge and categorize those predictions. If it's around actuarial models, I think following a lot of the principles we've always followed with models that we deploy and that we rely on probably will get you 90% of the way when you take into account when you take into account the differences that these models have from traditional actuarial modeling applications. So I think it's not so different if it's narrow AI models would be my answer.
Thank you, Ron. And then we'll take last question from Lens. This is a follow-up question to the conditional and unconditional feature plots. Have you worked with causal inference AI in any of your previous papers?
So yeah, so causal inference is not something that's widely practiced in the actuarial domain, but the one place you can understand where causal inference is extremely useful is in discrimination and bias avoidance. And there's a link between some of the discrimination-free pricing and Judea-Pill's do operator, which is a key tool in causal inference there. So maybe that's something one's going to look at.
Thank you so much, Ron. Unfortunately, because of time, we can't take any further questions. So I'd like to say thank you to Ron on behalf of ASABA and all the attendees online. Thank you so much, Ron, for this insightful and engageful presentation. I'm sure our attendees are inspired to embrace AI and work towards becoming the enhanced AI actuary. To our attendees online, also thank you for joining us. This masterclass was not going to be a success without you. So thank you, and I hope once again you are inspired to go and embrace AI and explore various ways in which you can use AI to contribute to our profession and in short-term insurance. Thank you so much and have a great day further.
Thanks and cheers, everyone.